John, thank you very much for joining us today. It seems like every time we get together, there's significant events happening in the nuclear energy sector or the uranium market.
We are coming into a seasonally slow period with summer, but I have a feeling it's not going to be like traditional summers because this has not been a traditional year so far, year to date. And many participants, I'd say, have been paralyzed with a lot of uncertainty and have been distracted with a lot of noise in the marketplace and have just not really come to market to buy. And I mean, when you look at UX Consulting's year to date term market contracting levels, it's at 26 million pounds year to date. That is about one third the run rate of replacement rate. So that signals to us that utilities have not been buying uranium thus far this year. They were a little bit light last year, and this is all leading to a lot of pent-up demand in the pipeline, in our opinion. So this could be a very interesting summer where the market, I think, is going to be much more active relative to other summers where the uranium market tends to go into a bit of a quiet period.
Yeah, and the key word you just threw out there is uncertainty. And we've seen this time and time again here in the last few months with companies reporting Q1 and Q2 numbers globally. And people are just saying people are paralyzed and they're not spending as much, they're not traveling as much because of this uncertainty we have associated with the trade wars and tariffs, et cetera.
Yeah, well, obviously the uranium equities were kind of following the spot price lower. And, from January 1st to around April the 7th, we had a pretty significant correction amongst the uranium stocks. And, we were down about 30% over that period of time. So it was very frustrating to investors that, remain very bullish and constructive, medium to long term, that all of this negative sentiment was pulling down the sector, even though this is a sector that has highly inelastic demand and that we know utilities, if they delay and defer, are just going to have to buy more later in the future. Now, it's been very positive since April the 7th, which is, I think, when the stocks bottomed, that first of all, tariffs were largely not applied to uranium. So that was a real lift in sentiment. And since that period in April, I think we've had 11 consecutive weeks of gains in the uranium mining stocks, which is really great. I think they're up about 60% over that period of time. So we've had a very sharp V-shaped recovery. They're still up modestly for the year, even with that big spike up. But, there's clearly, I think, a lot of people sitting on the sidelines.
So you and your team are always on the road marketing, and I'm curious to hear what investors are saying. Are people asking you a lot about the uranium products, or is there still a lot of focus in gold?
I think people are looking at uranium as something that is better insulated against all the noise and economic recessionary risks and concerns, given it's a product that can't be substituted, it can't be thrifted. We absolutely need it to generate about 10% of global electricity. And obviously the electricity demands are just going up globally. So I think their fundamental interest in uranium is clearly there. Is a lot of the hot money kind of washed out? Absolutely. I think it's long gone. I think you have more fundamental investors right now that are in the sector. Clearly, it feels like some retail investors have kind of come and gone, which is expected in any bull market. I think people kind of get washed out because the sector can be very volatile short term, but that's not unexpected. Many of these bull markets that can last years will have multiple short-term corrections that are pretty meaningful, and that's I think the challenge around maintaining your conviction when the fundamentals look great, but sentiment and flows in the short term can have an impact on the performance.
Yes, one thing we've learned in the last few years is that you have to be very patient when it comes to investing in uranium equities.
I think that it goes for all commodities. If I go back in time and I think about the 2000s and the gold bull market, and obviously Eric Sprott was a huge advocate and early proponent of investing in gold. There were, a lot of people get to, talk about its run from the 200s per ounce up to 1900. but it wasn't straight up. There were multiple 20, 30, 40% corrections along the way, even though, it had that overall huge gain. So I think it's common with all commodities. You get a lot of these kind of violent corrections that can happen very quickly. They settle down and they kind of resume. Now, obviously, you need strong fundamentals. And in uranium, we can't point to one data point that says the fundamentals are worse now than they were 6 months ago when the price of uranium was at 73. So, that's obviously what we're focused on is fundamentals. But in the short term, sentiment obviously can have a really outsized effect in returns and flows.
John, as we wrap up, what message would you like to convey to investors? And maybe you can also touch on what news events you think will be significant in the coming months as we head into year end.
Yeah, well, I would say that people are generally very fundamentally constructive on uranium. Yes, there have been some pockets of hedge funds that have been shorting some of the names. Not really sure what their investment thesis is there. The other message I'd like to pass is, a lot of people have said to us, we're really bullish, but what's the next catalyst going to be? The second thing I would mention is, we're coming up to WNA in September in London, which I know you will be there, and we will be there with our team as well, marketing. And every 2 years, they put out a new demand forecast for uranium. And if I go back to September of 2023, that acted as a really interesting catalyst to get the uranium market going because it was a meaningful increase in expectations around demand between now and 2050. We would expect they're going to put out another forecast in September that illustrates another, tangible lift in demand, given all of these reactors that are getting life extensions, all of the planned reactors that you're hearing. New York State just, the other day said they want to add nuclear capacity after closing one of their nuclear power stations in 2021. And they're going to start to build in that, these expectations, the hyperscalers, SMRs. Our bet is that it's going to act as another positive catalyst when the market digests, the incremental demand that is building in the system. And at the same time, while we've had a lot of brownfield, restarts of existing mines, we really haven't had any greenfields, come online yet. And that is proving to be more challenging than I think everybody would like to see. So the supply, I think, side of the equation has been improving, but it's got its challenges. And the demand picture, I think, continues to grow. So that's something we're going to be looking out for. And that's not too far away. So I think that's potentially a big catalyst in the hopper for early September.
Well, John, I want to thank you very much for spending time with us today and sharing your thoughts. And I look forward to seeing you in London.
Yeah, thanks very much. Always good to chat. And I think this conference is really well timed given the renewed interest in uranium.
Once again, thank you.